Welcome back to Power Lunch. I'm reaching you from the Nigerian Stock Exchange today for a change. And of course, it's important to note yesterday that the NSE index was now year to date is up 33%, making it the best performer on the African continent. Joining me to share some perspective on that move is Aigboje Higo, is the Managing Director of Capital Bancorp. Aigboje, it's great to have you on the show today, and I think it's something to be happy about. We're seeing the NSE index extend that rally. Particularly this week, it has gained a lot of momentum. Now the top performer on the African continent. Your thoughts?
Oh, yeah, it's cherry news. The market is up. For the week to date, we've had about 2.5% as of yesterday.
Just under 3%.
Yeah, under 3%. Today, it's treading water a little bit, but we expect that to close positive. So it's good news.
What I think is very interesting to note this week is that it has gathered momentum. Yesterday was up 1.7%. I think for a day change, it's probably one of the highest we've seen this year. What do you think is driving this renewed interest in the market?
Well, I think we'll come to the end of the year. So you are finding portfolio managers, realigning and recalibrating their portfolio. So there's going to be a bit of activity as people are trying to, clear and adjust their positions. I expect that the market will still go up a bit before we see the end of the year. So that's good. Yesterday, the index was at the highest point for the last 52 weeks.
Right.
So that's good.
Right, so definitely year-to-date high there. But okay, let's move on to some news today. Coming out of the market, we see Guinness being added to that market-making program. So far, we're hearing that the impact on the price has been more or less muted. Do you think things are going to change as we go into the trading day?
Yeah, it's early, and we still have about 2.5 hours to go. It's just been added, and I think we're going to see Guinness. It's going to have a positive impact on Guinness, but so far, it's nothing. Nothing has really happened. But I expect that before the market ends today, we will see some positive news on Guinness.
Where do you see value in this market going into next year? Of course, the big question is, would the banks extend the rally we've seen this year? A lot of people say that there's still value in the banks, but of course, they are the leading sector this year. Your thoughts?
I think I will have to align with them. There's still value in the banks. We still have value in some of the food and beverage sector, agri sector. Then insurance, you have to be very careful, very selective.
Insurance, you think insurance may be interesting next year?
Yeah, I think.
What do you think is going to drive that? Because clearly it's one of the worst performers this year.
Well, yeah, but you've got to look at some of the things that NICOM is doing, compulsory insurance and so on. So if that is done properly and it's done right and it's adhered to, then you expect insurance to bounce back. And I think most of insurance companies, some of them, have gone through a lot of reforms. They've restructured, and that should begin to pay some dividends. So I expect to see 2 or 3 of the insurance companies do very well.
What are your own thoughts on the macro picture? The economy is expected to grow about 6.5% this year. Pretty good in a global context. A lot of people say this economy is still underperforming. We know that the power reforms have gone some way this year. Many people are hopeful that we'll close on those deals next year. Your thoughts on the macro picture in Nigeria today?
Well, I think it can only get better. I think, like everybody else, I believe that the growth needs to be more, evenly spread out. It's concentrated in oil and gas, telecoms. We need to see growth in agri, in power, and in other sectors. Have a balanced growth. Change the unemployment picture. But the fundamentals look good. Price of oil is still right. We are diversifying the economy slowly but surely. There's this issue about fiscal discipline, about reining in the spending and all of that. A bit of talk on that. So if we see some action on that, see some action on the fuel subsidy issue, then 2013 will be a fantastic year.
I want to get your thoughts on what I'm seeing on the floor today. Not too many people trading from here. Some people are suggesting that this reflects the impact of technology. Some others are saying it's the holidays. Your thoughts on
No, it's technology for sure. Because I know that we're not on the floor, but I know that we are trading. And I know that a lot of other houses are trading from, and the way you see that is in the volumes you see at the end of the day. So it's too early. Holidays haven't started yet. The market is still live.
All right, we'll see how things play out. But moving on to some of the other initiatives we're seeing from the stock exchange. Going into next year, I think there's a lot of talk about bonds, retail trading for bonds. Your thoughts on the changes that we're seeing, particularly with respect to the bonds trading? Because clearly, this market has really been equity-driven for the last, few decades. But now there's a thinking that we should get the bond market more vibrant, at least from the NSE perspective.
Well, the issue has always been that in the capital market, it's been an equities capital market. Now, on the bond side, we have DMO recently selecting a stockbroker. We understand that AMCON is about to also select a stockbroker for their own bonds. And the NSE is currently trying to select or appoint some market makers for bonds. Sort of democratize the holding of bonds. So I think it's great because what that does is that it gives investors, particularly retail investors, another opportunity in another asset class. And I suspect that first quarter, second quarter of next year will be very, very important in terms of delivering that to the market and getting the investing public engaged with that sector. But all that has been done so far has been good. It's been succeeding, and I can see that the bond market will just take up, particularly at the retail level.
But many people will point to the fact that there's a learning curve. Clearly, in the OTC space, the banks are used to trading bonds. They understand all the concept, duration, etc. But what about the stockbrokers? How ready do you think they are to get into the bond trading?
Well, I think
market?
At the theoretical level, I would say virtually every stockbroker has the grasp of
it's
the
part of
theoretical
the
issues.
Yeah,
it is.
I guess.
But again, that's very practical. But I think a lot of things are being done. A lot of people are doing in-house trainings, building up capacity and so on. But I know that the exchange, I've held discussions with them, the stock exchange, when they unleash the market makers for the bond market and so on, there's going to be a bit of training, discussions, carrying the markets along. So there'll be more training and more knowledge passed down, and I believe that over time that will ramp up and we'll see a good good bond market.
Let's talk a bit about next year. Your expectations, the market is up 33% already. It's poised to be the top performer on the African continent, already top performer right now. Your thoughts on what we could see from this market in terms of value next year?
No, I think the market still has some way to go. Some sectors, the period shows there's still room for growth. In some companies, fundamentals remain good. Recently, with forbearance for stockbrokers, it's like good news. So if you look at all the issues, the debt overhang, the banking crisis, insurance is being cleaned up, it's like it's come full circle. Everything has been sorted out. So it's time for the market to begin to find its level. I think the banks will still do quite a bit. I expect good things from the brewery sector, agri sector, flour milling sector. So there are many stocks that we expect to do very well. So I see 2013 being much better than 2012, all things being equal.
We're expecting the inflation numbers next week, but I think the broad expectation is that inflation is going to trend lower at some point next year. Already we're seeing yields come down, sub 12% these days. Your thoughts on how much of a lift this is likely to give the market?
Well, that's good news for the market because that makes yields perhaps more positive, and it's perhaps people move the savings away from fixed income instruments into the equities market because the yields of 15-16% in the bond market, fixed instruments market, that's
a bit history now.
Yeah, it's history. So it's more realistic, and I think it's good. It's good for the economy. Hopefully people can borrow. People that need to borrow can borrow at lower rates and use it to grow and develop and employ people and create growth in the economy. So if inflation goes down, that's good. But then I still worry about that because perhaps food inflation will be high because of the floods and so on. But what will happen with the price of petrol, we'll see. Right. I was in Abuja yesterday. There are long queues everywhere, so something has to give. So once we take the issue of food and fuel, then if we're able to control and keep them under control, then perhaps inflation will trend downwards.
Okay, so still a few issues on the macro side to worry about.
Yeah.
All in all, positive for next year.
Yeah, outlook, as far as I'm concerned, as far as we're concerned in Capital Bancorp, good year.
All right, let's leave it there. Thank you so much.
Thank you.
Aigboje Higo, CEO of Capital Bancorp, giving us his thoughts on the market.